What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course check in on our broad market, notably some monthly charts there. We have our core list of companies, and this week I've got 4 trade ideas to share with you towards the end of the video. Now, I can't lie, none of these came from Discord members this week. However, if you want to chat with myself and other great traders in real time, definitely check out the links down below in the description. The Discord is there among all of our other resources. That being said, let's zoom out here to the monthly and talk about the significance of these blue lines here. So kicking things off on the SPY monthly chart, let's first talk about September. September, of course, is the red candle here. And what you'll notice about it is that from the highs to the lows, we've taken out the prior month's low. And this is going to stop, in effect, the one time framing higher that we had ever since September of last year. So almost 11 months where we consecutively made a new higher low month in and month out has come to an end. Now, that's not to say that the market needs to fall apart here. It's just simply indicating that the uptrend we were in is not as strong. Very simple. Don't read into it too much more than it's worth. The next thing to point out is kind of this data that we have down here, okay? So I want to at least mention that from the high of September, the high of the market essentially, to the low of September, we've seen approximately a 5.64% decline off of those highs. Now, financial institutions would typically classify this as a pullback around that 5% mark. And typically, based on historical data, that's going to happen about 1.5 times per year. Now, why am I even bringing this up in the first place? Well, I think it's going to help us understand why there's a significant amount of volatility at this point in the market. If you've been watching on an intraday basis, there have been wild swings from lows to highs, back down to lows, back up towards the highs, right? It's been the absolute craziest movement I've seen in quite some time here in terms of snappy action and lack of follow through. So why is this happening, right? My theory is that you need to think of the market in terms of time frame duration traders or investors, right? Camp number 1 here is your typical buy and hold investment strategy. You just buy the market, you wait 20 years, hopefully it's higher from then, and throughout history, that's proven to be a pretty effective strategy. This is typically your investment funds that are dealing with retirements, pensions, so on and so forth, and they need to put dollars to work. And if you think about a pullback of about 5%, typically happening on average 1.5 times per year, would it at least be logical to say that this camp number 1 here is deploying some capital at this area in here? To me, that would be logical, right? Camp number 2 now is going to be your shorter duration traders, and that's exactly it. Traders, not so much investment. So this could be hedge funds, it could be retail with large accounts, it could be a number of things, basically anything that's not your buy and hold strategy. And what I think is going on here, okay, so this is going to be positive delta, this is going to be negative delta, right? The camp number 2 sees that we're making a downward descent. Typically, these people are classified as contrarians, trying to pick tops, trying to time bottoms, right? And they might want to see downside continuation. Note that you can make a lot more money a lot more quickly on a downside move. I'm not saying we get something like this, right? But I am just illustrating for, example's sake. You can make a lot more on the downside than you typically can on a slow and steady grind higher. So in my estimation, this camp wants to be net short, this camp wants to be net long. Now, what does this do in terms of push and pull? Well, let's just note here that arguably these people have way more capital to deploy, right? And I'm not saying they have to go all in here. That's the difference, right? This is going to be much more aggressive with the entry point. This is going to use a larger dollar amount, but it might not be as aggressive, right? They might also dollar cost average into the move if we see a 10% correction. That brings me to my next point. Now that we know what's going on here, if we see a 10% correction, then that's going to be around the 409 whole dollar. And that's going to happen once every other year, or about 0.5 times per year, right? So that's going to be at 409. And then after that, the bear market is classified as a decline of about 20% or greater, happening 1 in 7 years. And that would take us down to about SPY 365. Okay. And, speaking of bear markets, this decline, just for the sake of, information and clarity here, that was about 35%, right? And that happened in 2020. So based on statistics, it's very unlikely that we would have another bear market in such short proximity of time. It's not to say that it can't happen, But again, based on statistics, based on the odds, it would not favor that type of move. So those are my 2 cents here from the monthly. Hopefully that perspective was useful. Let's take a look at the weekly, see what else we can learn about the price activity here. If we zoom in, not a whole lot to talk about from the weekly. You can see that the bars are almost equal in both structure and range, right? And typically whenever we have this, we just go with the direction of the most recent one. So certainly a red candle, undoing a lot of the positive work that was done in the prior week. However, we still have a lower wick. We did not take out the high, and we only made an incremental lower low. So not the end of the world here from the weekly perspective. Again, if you were watching intraday, just a lot of volatility back and forth, closing back down here towards that 5% mark. So let's flip it down to the daily now, talk about tradable levels into the upcoming week, put the levels on. There we go. Let's zoom in a little bit. I think the S&Ps are all going to boil down to this resistance trend line, right? We talked about this in the midweek market update, and the title of that video was, is the trend starting to shift? And I would argue, yes, it has started to shift. We've already seen a rejection off of the resistance trend line. We're now spending more time underneath our 50 SMA. So I would classify this as definitely a short-term little downtrend, right? It's not to say that the overall market has flipped bearish, but in terms of trend reversal, it's certainly underway. We've made a lower low from here, so we have lower low, and now we've also made a new lower low underneath that. We're continually making lower highs, so again, all things are in place for a trend reversal here to the downside from our really strong positive uptrend that we had in the past. So the only sort of sentiment shift that I can see happening would be a break, again, of that resistance trend line. To me, this is going to coincide for super resistance, right? If there is any upside activity, look at what we have here, right? This 437 area, for round numbers sake, is coinciding perfectly with the resistance trend line. So that is an area of contention. If we can take it out, though, note that from the midweek market update, we did discuss that this is a poor high from, I believe, Wednesday's session. Yes, Wednesday's high was a poor high. We went almost right to it on Thursday. If broken, I would imagine we refill the gap up above from 440 up to about 442. That's a very optimistic case here. And as we mentioned from the monthly perspective, that would seem to me like the long-term buy and hold investment strategists are kind of winning out the fight between short-term volatility who wants to see it lower and long-term actors who are basically buying the dip, quote unquote, in this marketplace, right? So that's what I would watch out for to the upside here into the earlier part of the week. I don't think things really change or get bullish until we take out the resistance trend line. To the downside, what else are we seeing here? Again, we are under the 50 SMA. We're still well below the resistance trend line. If there is rollover, all eyes are on this area right here. I mean, how obvious is this as a double bottom? If the 428.87 breaks, the anticipated reaction should be that a lot of people will get out of the way, right? We will see markets moving lower. But generally, right, when a lot of things seem obvious, sometimes the opposite can hold true. You see a rally higher. So I would use extreme caution around 428.87 as opposed to being overly confident to the downside on the break or overly confident to the upside that we could see a bounce, right? So please just exercise caution around that area. If we do move lower, the target would be this prior pivot low from in here where this major pullback happened from, and that would take us to 422.20, we'll call it for round number's sake. Let's just quickly remember where that 10% move would be. If we scrunch the chart up, it's fairly lower around that 409, right? So it wouldn't be a full 10% correction, but it would be an added move lower on top of the 5% pullback, which we've already experienced. Let me quickly bring up our sectors here to talk and provide a little bit more insight into the market potentially rolling over. As we know, this is what we do in the midweek market update on Wednesdays. I want to bring this up though because, again, as things are starting to shift, it's worth noting what the components of the S&P are doing. So XLK, the tech sector, heaviest weighted sector here, is not all out bearish. If you remember from the midweek market update, we were essentially watching to see what happens at this area in here. Notice that we haven't definitively broken it to the downside, although it is broken, right? We're kind of closing and trying to resolve it into the end of the week here. So that to me leads me to believe more neutral inside of the XLK. Obviously, if it breaks down here, yes, that's more firmly moving into bearish territory as opposed to neutral. So it's all about that 151 area in the XLK and tech. Let's take a look at the XLF now, financial sector, second heaviest weight. And obviously with interest rates screaming to the upside over the past week, that has meant that the financial sector has moved back inside of this overall range. Now that's a good thing for the S&Ps, but again, it's more neutral, noting that we're not continually making higher highs, and we're just kind of hovering around the midpoint of the range. So it's not, totally dragging the S&Ps higher, but it's also not weighing down on it as much as the XLK potentially rolling over. Lastly, let's take a look at the XLV for the healthcare sector, third heaviest weighted sector. And what we'll notice about this one is it's obviously much more bearish, right? We have this high, we've put in a lower high and a significant lower low. This is not so much neutral like the XLK and is much more bearish. Obviously, the sort of healthcare sector, biotech sector specifically on Friday had an absolutely nasty day, but we did print a hammer candle. So I wouldn't be surprised to see some sort of dead cat relief bounce here, but if it cannot sustain itself, if it can't make its way back above that 131, even this area right here, let's throw a level on the chart for that actually. That's going to be around 129.50, we'll call it. If we can't recapture that to the upside, this is in a downtrend, right? This is providing some bearish drag on the marketplace as a whole, and again, would lead me to believe that the trend is slowly shifting to the downside. So those are the components I'm watching out for here, and really a holistic view of the S&Ps. I know we spent a lot of time here, but I do think it's worth doing, right? As we start potentially shifting gears into more of a neutral to bearish space here in the marketplace. We talked about upside levels and where things change. We talked about downside targets. Let's move on over to the Qs and flip it back to the monthly time frame. Again, I know we spent a lot of time there, but it's worth doing. It's worth understanding what your markets are doing to help you make better trading decisions. In terms of the QQQ, we obviously broke the prior month's low, but in this one, we haven't been as aggressively one time framing higher, noting that we've done this in the past here. Now, the difference being that obviously this was a dragonfly doji, a bullish candle in my estimation, and this one from September is a more bearish candle. This, of course, is going to represent your 5%, your 10%, and your 20%. And what you'll notice is that we're, a little bit further below the 5% mark, whereas in the S&Ps, we're kind of right at it, right? So to me, a little bit more bearish here inside of the QQQ, largely due to the impact of the rates moving higher. Let's go on down to the weekly. Again, breaking down here, making a more substantial lower low, not as same size bodies as we saw in the S&Ps, so slightly more bearish. Let's go on down to the daily here and talk about tradable levels with our sort of, map here. So if we zoom in, what we'll notice again is that we're spending significantly more time underneath the 50 SMA. Our gap is still overhead, and the resistance trend line is much further away. So this basically means that there's a lot more work to be done to flip this trend back over to bullish. The other thing that I would point out, just looking at this arrow that I've drawn, if there is any sort of dead cat bounce, what did I just draw in, right? What we would have is some sort of potential. It doesn't have to unfold this way, but the potential for a head and shoulders pattern, which of course we know is a bearish reversal pattern. We would look for a break of the neckline, arguably this level down here, 355 to take us lower. That's a longer term outlook inside of the marketplace. That's if things kind of fall apart, roll over inside of the SPY as we discussed, and maybe those short-term momentum traders take control as opposed to the long-term investment buyers. So that's a longer term theory. On Friday's session, we certainly printed a nice hammer candle off of a known zone of kind of support here. So again, I wouldn't be surprised to see a little bit of a relief rally, but it's not totally going to shift the trend until we can break the resistance trend line. Note that we have a gap as well here from about 366.38 up to about 367.73. If that fills, the next target would be the resistance trend line. And depending on how the week pans out, if the 50 SMA wants to roll over a bit, that would coincide there as well for a super resistance. So generally looking for a rejection of the QQQ around this area if in the first place there's any sort of bounce. Obviously the line in the sand, as we mentioned, is the neckline of this potential pattern at and around that 355.20. If it breaks, let's just go hunting for a target underneath. I would say it's this prior breakout point from in here around 345, we'll call it for round number's sake. Let's take a look on over at the IWM now, and we're not going to, be so concerned with those correction areas, but we will go back out to the monthly just to sort of illustrate what do we have here. That's a little bit too zoomed in. This is a bit better, right? Typically, we would consider this a bull flag, right? So very, bullish pattern happening in an overall bullish marketplace. This is not as aggressively signaling risk off as we've talked about for weeks on end now. So the monthly here in the IWM, it's fine, right? We still made a higher low. We also made a higher high. Let's drill down to the weekly and we'll take a look at this pattern. Again, not really much to comment on other than the fact that we're getting some range compression into something that would look more like a pennant as opposed to a flag, just sort of a nuance based on words. We'll come down to the daily. We'll turn all our levels back on. And again, I think the interesting thing about this is that IWM is generally seen as your risk on, risk off asset. And where are we? still smack in the middle, even as the S&Ps and the Qs have gone through this insane bout of volatility. This has remained steady, really using that 220-250 as a magnet. I do think, and as we mentioned in the midweek video, some things to pay attention to here are definitely this resistance trend line and this support trend line, right? We're basically tightening in terms of range, and either a break up and over resistance could foreshadow a move to the top and then a higher low pullback for the big breakout, or the same but opposite to the downside, right? A break here could foreshadow this dead cat bounce and then a larger break to the downside where it's more of a risk off indication in the IWM. So just some things to be watching, but as it sits right now, and as it has been for the past however many months we've been talking about it, neutral risk, which is sort of supporting the theory that maybe, again, the longer term investment buyers in the S&Ps are stepping in here and they're going to beat out those momentum traders to the downside. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking things off here on Apple, and we will keep our companies brief since we spent so much time on the broad market. Basically looking at a hammer candle from Friday, very similar to the QQQ. I think the bullish trade only unfolds if we can take out this point right here. So 144.50 on the break. Your target would of course be this next major pivot high at 147 the whole dollar. And after that, it's all about the blue line, the 50 simple period moving average. After that, remember, there is a lot of overhead resistance here. Not only do we have some highs from here, we have the prior breakout point just at and around 150, the secondary breakout point from here, 151. So just look at this as an overall area of resistance to the upside. I wouldn't be overly aggressive noting that, right? If you look at this as a range, sure, we have a hammer off of the bottom end, and if there's any upside development that happens, I would not expect it to break, all in 1 week at least, this top of the range here, right? It typically would come up here, consolidate, pause. If it is going to break, then your move is clear up and over that area of resistance. But again, I don't think it happens all in one go. If we do make it to the top end, I would expect a little pullback into the remainder of the week. And that is, of course, only if we get the bullish trigger in the first place up and over this pressure cooker top at 144.50. On the rollover and breakdown out of range here, what is the target? Well, firstly, we're going to have to contend with this 138 gap fill area. Remember, that's a target, not necessarily a range to trade here. So that's number one. And then after that, it's all about the green line, the 200 simple period moving average. And if we scrunch up the chart, what you'll notice is it's coinciding perfectly right now with a prior breakout point around that 135 quarter, right? So that would be my downside target. And does that make sense from a range doubling perspective? Yes, right? It's just shy of a full range double, but to me, the 200 SMA, because we have not tested it in so long, should provide some support. Also, remember that it was a breakout point. Prior resistance should act as support when tested in the future. So that's Apple here. You have some levels to pay attention to. Netflix, extreme relative strength into this week. I mean, my goodness, the whole market sort of felt like it was falling apart. This is actually just sitting just shy of all-time highs. Now, don't get me wrong. I can see earnings are around the corner. Maybe this is a pre-anticipatory run up here. I'm not entirely sure, and I would prefer not to speculate about earnings. But if there's a break up and into blue sky territories, we're basically looking at whole and half dollars intraday levels that do form. Note the way that we've arrived at the all-time high, right? We basically came off of this, made the move higher, consolidate, or didn't really consolidate, but pulled back on Thursday, right, off of the highs. And on Friday, we recover from a gap down. This, to me, is showing some extreme resiliency from the bulls. Now, again, this doesn't mean that we have to break out, but it would sort of give them a bit of an edge, right? Big relative strength here inside of Netflix. To the downside, only being bearish on this one if we move back underneath this 593, noting that that wouldn't really be forward and upward progress, right? We don't want to return, oops, let's grab the other tool. We don't want to return into areas where there's high value, right? We want to make price exploration in the positive direction and not get stuck back into, again, where there was an area of high value where a lot of shares were traded in exchanged hands here. So that's the bearish implication if we move back down there. The last thing I'll leave you with on Netflix is if we take out the support trendline tool, come in from our lows here, if you want to just use this as a black and white bullish above, bearish below level, certainly can do that, right? So healthy consolidation happens here, break is up above. If we take it out to the downside, that's where you say, you know what, a little bit more bearish here than we thought inside of Netflix. And I guess the last thing I'll truly leave you with is if that does unfold, what do we have, right? Double top from in here. Technically, the bearish neckline break would be underneath 575. So please be patient if that's your outlook inside of Netflix. Next up, we'll move on over to Tesla. Tesla, good relative strength as well. Remember, we discussed this in last week's video. The main thing I want to point out is look at how nice this chart is developing, right? We had an area of consolidation. We break it. We then use it as support once, twice, 3 times. We break it. We then use it as support a number of times. Don't get me wrong. Certainly a fake break down below. But from then, we've done it once again. Area of support, 1, 2, 3, and now we're doing it yet again. So we're making building blocks in the positive direction, and now your breakout point is up and over 800 outside of this area of consolidation for price exploration higher, and we know that our next overhead target, if we sort of look at this, would be right around 833. So let me grab the other tool. We'll mark that in officially. There we go. So around 830 would be the next overhead target. And that makes sense as well from a range doubling perspective, right? If we do something like this, let's actually scrunch the chart up so we can see. There's your range. If we double it, that kind of brings us into that number which we just found. So after that, of course, we are looking at some higher highs. Let's go ahead and put this on auto, scrunch it up, and we would be looking at kind of the all-time highs. Again, I'm not saying it has to happen all in 1 week, but good relative strength out of Tesla. If it does want to pull back and give us another support trendline touch, remember, we did make a higher high here, so it can be a buy at the support trendline. A beautiful thing if it wants to tie in for a super support with the 50 simple period moving average, which it looks like it is doing thus far. Let's move on over to BABA. Some decent price action this week, believe it or not. I mean, look at the activity of the last week, right? We're not gapping all over the place like we were in the past here. So again, that to me is sort of exciting, again, just because it hasn't done it in so long. So a critical area to pay attention to, which we've kind of closed underneath now, is this 144.50 mark. But if there can be a recapture early on in the week, then I would expect we get a move higher to here. Notice how this 149.50 was prior support, then is acting as resistance here. It was also support here. So I do think that there is some credence to that level, and it should be respected as resistance when testing from the bottom side up. After that, we know that there's a shelf here at 144.50, and from there, obviously, we get into chicken scratch back here, but I like what's happening in terms of it starting to respect a little bit more nuance, right, and not just gapping wildly all over the place. To the downside, please be careful. As we know, there really is no price history underneath us, so just watch out for $1.50 intraday levels that do form here inside of BABA, but certainly trying to make a bit of a technical recovery here. If we move on over to Facebook, this one is kind of interesting, getting some bearish acceptance, kind of turning into this as a bear flag. Now, not the most pretty thing in the world with these two candles here. However, a flush point is certainly in place at that 338.33 level, we'll call it, just for round number's sake. Nice third there. So if we break down underneath these 4-day lows, we would anticipate a move lower into the next major support from in here around that 328, let's call it 329, right? Just for round number's sake. So that's the downside play here in Facebook, looking short on the break of 338.33. To the upside, because we have a bit of a double top, if I just zoom in a bit here, what you'll notice, touch 1 and 2, if broken, takes us to 350, psychological number as well as support, resistance, resistance. I would expect some sort of reaction when and if we get there, and then after that, really looking more into this pivot high prior, historical level as well. If I scrunch this up, here is in the past, right, big breakout point at that 356.75. Keep that in mind as well to the upside. Just like Apple, look at how much time we've spent under the 50 SMA now. Look at how this bear flag is kind of forming. That's really sort of, pushing it to the upside here. Now, don't get me wrong. There could be some sort of snapback, especially if rates kind of collapse over the weekend. Who knows for sure? But based on the most recent trend, be a little bit more cautious to the upside here. Again, on a break lower underneath that 330-ish zone from in here, which we discussed, probably looking out for, just like Apple as well, the 200 SMA and that 316. Now, again, don't get me wrong. This is a very aggressive move lower. Coming off of this, I'm not anticipating something that size, but that would be the next structural area to pay attention to here in Facebook. Next up, we have NVDA kind of falling out of the bull flag, which was not the greatest thing in my estimation. I mean, this was a nice recovery back in, just retraced 100% lower. Obviously, not as much time spent under the 50. We also have that hammer from Friday. So to me, it's not abundantly clear what direction it wants to go. I would say likely for some sideways activity here, noting that we're in between, right? We're in between ranges from in here. Doesn't look like there's an alarming amount of conviction to the upside. If we do break, you have some overhead levels to pay attention to. 214, 220, bottom end of the flag after that, just like the rest of the companies we've talked about. Note that this is a bearish trend. Don't get overly aggressive to the upside. I would expect some resistance there at the 220. If we do roll over, we know that we have support from in here. Kind of choppy though. Note that it was resistance, resistance, resistance. Kind of chopped around it here. Never really used it as too much support. So I would be skeptical, but it is 200, the nice psychological number. Underneath that, that's where things get a little bit more nasty. Back into this double bottom 187.50. Again, based on how the chart sits, this direction here is not abundantly clear to me. Again, an incremental sort of lower low, like grindy low, like the sellers had to work really hard to get it here. And then it was bought up on Friday afternoon, right? So to me, not abundantly clear which way this one wants to go, but you have the levels. Next up, we'll take Microsoft. I love what happened here on Friday. We talked about it in the Discord. Nice gap fill reversal early on in the morning, making a move into a known area of resistance and support and resistance here at and around that 290 figure. So to me, well, it's not so much about this 283 area anymore. And I'm not even saying that it has to retrace 100% here, but the line in the sand is quite simply the gap fill at the 281. We do not want to see that area breached. Otherwise, we would expect more downside, right? But as it sits after the gap fill reversal off of a pretty substantial pullback here, I would be watching out for the potential for a breakout here. Anyone who got short late to the party on either Wednesday or Thursday, essentially, is likely going to start to have to cover as and if we breach that 290. So looking for a move higher into the 50 SMA, as well as the prior breakdown point from in here, 294. After that, you can walk up the levels. It's really kind of about this, right? The bottom end of this range at the 297, we'll call it for round numbers sake. And just like we've sort of echoed in many of the companies now, don't get overly aggressive to the upside, especially with this pullback, which is occurring right now. I would expect if we get there in the first place, a higher low pullback and then maybe a break back into this range, but not all in one go. Underneath that 281.55 area, the line in the sand, we know that there is next up support at 275. Nice round number. Last but not least, we have the beast here, Amazon, and clearly, making a descent, but after 1, 2, 3, 4 days lower and very incremental lower lows. Again, maybe this is just more of a feeling type thing, but I wouldn't be surprised if there is a little bit of reversal higher here, noting that the sellers have really had to work hard to try to keep this thing down, try to incrementally make those lower lows. And if we get a break back above this area here, let's just call it 33.10 for round number's sake, 200 SMA as well, I would imagine a move into the resistance trend line. From there, start to reevaluate. Imagine that the 50 SMA will start to coincide there and see if you can get an inverted hammer to print, and then maybe there's a short after that. But as it sits, again, maybe a little bit of a dead cat bounce here. I'm not overly confident to the downside that we see more of it, but if we do, we're looking at about 3180 as a downside area. And then after that, note that that's where things get nasty in Amazon. That would also coincide with the break of this prior area in here. Really, the next shelf is at 3028. So be careful to the downside if that does develop. But again, based on what we've seen here, I would argue that it wouldn't be unreasonable for a little bit of a dead cat into the resistance trend line as mentioned. If it breaks, and again, just like we've talked about with all of our companies here, be skeptical of upside, but if it does break, the move would be to here at the 3438. So that's going to wrap up the companies. Let's dive into the trade ideas. Quick reminder to hit the thumbs up button, subscribe, all that jazz down below. You know the drill. And let's get right into these trade ideas. We'll keep it very brief considering the time here. If you look at what's going on in GM, simple bull flag. If we can take out the highs here around 53.50, looking for higher. What's the target going to be? Well, I would argue this is the first area to pay attention to, 55.11, 55 the whole dollar if you like nice round numbers. And then after that, it's all about the gap fill, right? If we can take that out, look, there is a gap to fill from in the past here up to about 56.59, call it 56.50. Those are upside areas. Not so interested in the trade. If we break down underneath the blue line, the 50 simple period moving average, I would imagine we make our way lower back towards 50, the round number. Boeing is up next, and this one is a longer term trade idea, simply noting that we have anchor for the resistance trend line, touch 1, 2, 3, 4, and 5 here. If we can hold this as sort of a higher low, then look for the break to take us into the next touch of the resistance trend line. That would be right around 240 as a nice round number. That would be on the break of, I would just call it, again, resistance trend line and 200 SMA, so the green line on the chart here. If we get the clearance, there's your target. To the downside, again, if we get rollover here, not obviously interested in the long trade, and I would be careful waiting to see what happens here at 211, noting that we had a fake breakdown. If tested once again, maybe we get the real breakdown for lower here in Boeing, but as it sits right now, watching for the bullish trade up and over the resistance trend line early on in the week. Next up, we have LVS for Las Vegas Sands, and checking in on this one, we clearly just have a range, right? We had a fake breakdown here, so it doesn't look like it wants to go lower. It always could, but if we get the break of this, first target is about 40, and what you'll notice is above that, we have another gap to fill, just like what we talked about in GM, so the target therefore would be up at 41.76. You have some tight risk here, essentially, right? If you break out of the range, then your stop goes back inside of the range. If you don't break out of the range, you never take the long trade, and even if you want to take it short, you would wait for the 36.25 break for that move lower, noting the bump in the road from the fake breakdown on the first go around. So those are my my thoughts here. Tight risk based on a consolidation range with a gap overhead like that. And then lastly, we have open, OPEN. I've considerably covered this one on the other channel here, and just noting that we have a bull flag, right? Something that looks like this, consolidation just underneath the 200 SMA, support trend line is underneath. So technically, if you want a better entry, maybe you could wait for this to pull back into it, but I would argue based on the candle from Friday, it's likely not going to happen. I can see this one going early based on the hammer candle that's printed. Your break is up and over these highs. Let's just call that 21, the nice round number, to get into 22.26 coming from our prior area of resistance in here, touch 1 and touch 2. Obviously not interested in the trade to the long side if we never get the break or if we start getting price acceptance under the lows at $20. So those are my quick 4 trade ideas. If you enjoyed the video today, let me know down below in the comments section or by giving the video a thumbs up. Remember, check out the links in the description, and all of that being said, I wish you a green trading week.